Hi and welcome to Trade of the Week. A surprise date with the local hospital meant that I didn't trade this week, but here's a cracking bet that I'm going to pretend I made. Short EuroYen. In the current climate, this currency pair is almost perfectly opposed. The euro is paying the price for its dodgy Club Med members, whilst the yen is seen as the fashionable risk-averse long bet. The EuroYen had fallen on 1,200 pips since the start of the year, but a February rally retraced a quarter of the move. This rally closed bang on a minor Fibonacci level, and although that in itself wasn't a reason to sell, it was a useful amber alert to watch for a reversal signal. One of my favourite strategies using a 1 hour chart is to look for a close below the 21 period moving average, confirmed by an RSI below 48, and there was a great example of this on Tuesday, where the signal carried more weight because of the preceding candlestick pattern. Granted, this evening star reversal wasn't perfect, but the thought was there and it added to the bearish move. I'll just bring that one up. Also, although I don't rely on them, the MACD and the parabolic indicators confirm the move lower. This currency pair is pretty volatile, so I would have reduced my bet size to £5, selling at 123.71 after the candle closed below the moving average. The stop loss options here weren't ideal, so my default would be to place a stop 20 pips above the 21 period moving average, which in this case was 124.17. On a £5 bet, that would give me a potential loss of £230. The euro was firmly in a downtrend, so I was going to be fairly ambitious with my profit target. My T1 level to close out £3 was 122.50, where there had been decent support on the daily chart. Then I'd run the balance with a trailing stop loss. So what happened? The euro fell throughout the day, and despite a doji candle at 2 o'clock, it hit my T1 limit of 122.50. There. The trouble was, as this is a pretend trade, it's harder to be honest about where I'd have closed out, because there isn't an obvious reversal signal here at all. But I suspect, if this had been a live trade, I'd have closed out on the green candle at 5 o'clock, which is there. The RSI was just recovering from an oversold 19. The candle was still outside the lower Bollinger Band, and I don't like running currency trades overnight. So, for the sake of the calculations, I'm going to take 122.04 as my closing price. So, totting up my gains, that was 121 pips on £3 and 167 pips on £2, for an overall pretend profit of 697 on a risk of 230. I'm off now for a pretend steak and Guinness. Have a good weekend and enjoy the rugby.